live soon. So which simply means that when we are through, they should be able to get what we're doing. Okay, we are live. Good evening, class. Good evening, everyone. So what we are going to do now.
Good evening, sir.
Good evening. Is that today we are going to look at the second question. Okay, good evening again, class. Because I need to start afresh. What we are looking at this evening is for us to look at what we'll describe as the subsidiary question, which is the second question in the series of questions that we have been looking at in the class. And from here, we have this question already sent to us. So for some of us that we don't have the question, we'll give you some few seconds to just screenshot what you have on the screen. And this question is a question that has been adopted either from the materials of ACC, CFA, and from Tom Clan's second edition, but also being applied to third edition. Now, what we are looking at is we are looking at a scenario. We are going to apply this for ICANN exam, corporate reporting. So when we are faced with a question like this, what do we have to do? We have all the information given to us. Beju purchased 250 million shares in Sheyi on 1 January 2021. And then Sheyi purchased 150 million shares in Temi, which is also having his years. And we have all the information given to us. Now, the first thing we always have, which should be the parameter about this question, is for us to be able to look at information relating to the following. And what are those information that we need here? Is that number one, we need to know what are the percentage holding. If you go through the question, there's nowhere that we have percentage holding. So which simply means that if you are not given the percentage holding, we need to compute it. And what are the measures for us to compute? The method that we have adopted in our own class is to use the units acquired divided by the total units owned. And when we're talking about the total units owned, we are looking at what we call the voting shares, which is the ordinary share. For Sheyi is 300, for Temi is 200. And that is telling us how many shares that were acquired, 240, and what we call 150. Now, these informations are there in order to guide us on what and what we need to do. Now, having been able to gather this information, the approach that I have said that is better in class is for us to tackle the question from what is the requirement of the examiner. The requirement of the examiner, or which is the requirement of the exam or requirement of the illustration, says prepare consolidated statements. Are we there now? Of financial position. You should be prepare the consolidated statement either of financial position for Beju. In a well-set exam, it will give us the accounting year end. Where you are not given, we automatically know that the financial record of this will be this. The record that we need there is 3112. Is for 3112 20 at the 3112 2021. 3112 2021. Do we get that, please? Okay. For those of us that were online, you can easily copy the link and paste it on your group on WhatsApp. So now, having gotten this information, let's go to our board and look at how to tackle all this information. Because we need all this information in order for us to be able to know What are those functions that we need to put into place? And you have been told already that if you are to prepare the question, go straight, which is very important. We write the information. What is information? Peju consolidated statement of financial position as at 31/12/2021. And you can see that what we have done is to write our format. Please note very well that if this is a standard examination question, we can change. We are going to have all the components of assets, maybe non-current assets, current assets, and you have them how they should be. But here we're told that we have only other assets. We have written the format, which is a pro forma solution. That is what the examiner is requiring us to do. So what do we need to do now? Group structure, which is step one. Don't forget that in our class, we have adopted our own style that we should use 5 guided steps. Group structure, the net asset of the subsidiary, computation of goodwill, determination of non-controlling interest, and the 5th one, which is group retained earnings. So the first step we need to look at is the group structure, in which we have seen that Peju acquired Sheyi and Sheyi acquired Temi. The percentage holding will be determined by looking at the unit of acquisition. So the percentage holding of Peju in Sheyi is 80%, giving us the NCI of 20%. Why do we need to calculate the NCI? We're going to see when we move on the approach, because the NCI needs to be computed in order for us to adjust for what we refer to as indirect holdings adjustment. Now we move to Sheyi. Sheyi acquired 150,000 units in what? Temi. And that's 75%. Now, we want to be very careful. The date it was acquired is 1/2020. Are we together? Now, to determine the NCI of Sheyi is not going to be a simple arithmetic of saying 100 minus 75. The question now is that we need to know the indirect relationship between Peju and Sheyi. And that simply means if you are looking at the indirect relationship between Peju and Sheyi, please note very well, there's no direct relationship between them, but indirect relationship, which is going to be defined as 80% times 75%. Class, what would that give me?
60%.
60%. Thank you. Now, if that is 60%, it means that the amount that will be attributable to NCI will be the residual amount. So the NCI will be getting 40%. So what are we saying? The NCI 1, the relationship between Peju and Sheyi is how much? 20%. While the NCI 2, which is the relationship between the group, which may tell me to be a sub-subsidiary, will be having a percentage of how much, class? 40%. Do we get that, class, please?
Yes, sir.
The first thing that we need to now tell ourselves is that we are now looking at indirect holdings before we move to other adjustments. So what is our indirect holding adjustment? We've already been informed in the last class that for us to get that will be the NCI percentage of intermediate subsidiary times the fair value of investment, or we say consideration, paid by the intermediate subsidiary. I'm not assuming that you know, so we have to make sure we bring it out in plain language. So simple question, class. What is the NCI of intermediate subsidiary? Between the two NCI that we have here, what will be the percentage?
20%.
How much?
20%.
God bless you. 20%. Then the question now is that we want to know the fair value. Are you there now? That was paid by the intermediate subsidiary. Where do we get that? To quickly go to the question. And where in the question do we get that value? We go straight to where we have investment in share. Are you there now? Investment in share is 800. This was the amount the parent paid. Investment in share, the parent paid this total amount. Not very well. This is what the parent paid. The intermediate subsidiary is share, and share paid 400 in order to acquire this. Acquire Temi. So what will be the percentage what will be the purchase consideration that's required in order for us to get the intermediate, are we there now? Fair value of investment. 800 or 400?
400.
400. Okay. Inside the class not want to talk because we are online now, so let's keep it cool. So the amount is 400.
Sorry, please, why are we using 400?
Thank you very much. 400 is the fair value either of investment paid by the intermediate subsidiary. Who is the intermediate subsidiary here? What's the name of the intermediate subsidiary?
She.
Thank you very much. So let's start giving them their name. She is intermediate subsidiary. Now, go back to the question. Let's see investment cost. That is the amount that was paid. Are we there now? Now let's see. What is the amount that was paid by those that are investors? Let's start first. Look at this. Peju. We have Peju. Look at it, like Peju is the parent. She paid, he or she, the entity rather, we can say she, paid how much? 800 in order to acquire those.
She.
Now, Temi was acquired by who?
She.
Temi was acquired by she. Now, how much was paid in order to acquire Temi?
Okay, 400.
400.
People, is it looking why? No.
Sorry, sir,
Not started
but
looking wild.
we're told in the additional information that the fair value has increased by.
Let's be very careful. The first thing we have done here is, but because what we are trying to do is that the group structure is an initial situation. Are we together now? What of the 410 is the additional information? Cool. Some of you have read ahead. But don't forget, in the exam, you are not a wish. You already have a step. I have picked 400. If I not get additional information, there's a need to adjust. You know, I cannot come back to adjust. First of all, you must know. What I'm trying to do is that, remember in the last class, we did not have anything called adjustment. But where we now get to adjustment, we move. This is what we have done. So the amount that we are going to have, class, is going to be how much? Speak to me. What will be the amount?
400.
400. That is what we are supposed to have. Somebody is saying no. What's the question that you are having? Speak to me. Okay. So we already have 400. That is what we have. And with 400, what would that have given to us? That give us what? 80.
80.
Yes or no?
Yes.
So if I have 80, can you remind me what would have happened? What would be the accounting entry for this? What do I debit and what do I credit? We are going to adjust it with our work class. Non-controlling interest, which is how much class? 80. Then credit our cost of what?
Cost of investment.
Investment.
In what class? In Shei. How much? 18. Do we get what we have done?
Yes, sir.
Okay. Now, this is us doing all what we have done now without having at the back of our mind, maybe there's an additional information. And I'm not a wish. Because you don't know what and what you have. You have done this and your mind is. If there's not an additional information, we can make adjustments. Yes or no?
Yes.
Yes. And that additional information, you must have it. So you need to know why and why some things are changing. So having done this one, we move to additional, we move to what? Working two. Can somebody remind me what would be our working two? What do we
Net
compute in our working two?
Assets of Shei.
God bless you. So we are going to have here the net asset of this subsidiary, which is the immediate subsidiary. In that case, we are going to have date of acquisition, date of reporting, and post-acquisition. Please, if you are having network issue, you can join us on YouTube. So the only challenge I will just have is that if you join us on YouTube, might send the YouTube link. My people, did I send the YouTube link?
Someone has dropped it on the group chat.
Oh, God bless you. Oh, God bless me for you. May your boyfriend never run away.
He's a man.
Okay, if you're a man, may your boyfriend never run away. Sorry, we're on YouTube. Let's go on. So what we have here, ordinary share, but we are Nigerians. Let's tell them. We now have what we call ordinary shares. After ordinary shares, what do I have?
Retained earnings.
Then we now have what we call our retained earnings. We are not wish, we might equally have what we call adjustment. Then after that, we move to the 2B. What is 2B? That will be the work class.
Asset of Timmy.
The net asset of who class of Timmy. I love to use name so that we don't start. This is for who? She. And we have for Timmy. So we have date of reporting and post acquisition. Don't forget, we say when it comes to Timmy, we have adopted our own skill and our own time to say dates of being a membership or to be a member of the group. Do we get that? But I told you that if you get to popular textbook and all the rest, they will tell you date of acquisition. But why we say date of member was that it was agreed in the class so that you'll be able to know that. And let's quickly go into that date factor. What is the date of acquisition for Shei?
January 2021.
2021. What will be the date of membership for Kenny?
2021.
That's January 2021.
So be very careful. We are not going to pick the date that Shei acquired Temi, but rather the date Temi joined group. So which day are we going to say that Temi became a member of the group?
1st January 2020.
2021. God bless you. Any question on that point? So we have here 1/1/2021. We also have here 1/1/2021. Class, any question? Anybody? Mr. Wasil, are you online? Madam Shitu, are we live and clear, ma'am? Okay. Christina, clear? Divine, are we clear?
Yes, sir, we are clear, sir.
Okay. Now, what will be our date of consolidation? What will be our date of consolidation, class?
31st, 12/21.
Thank you very much. Thank you, Vivian. Is that Vivian voice? Okay. Okay, if you are there, I am there. Now, step 3, what's going to be our step 3?
Goodwill.
Computation of goodwill. To get our goodwill, we have also adopted our own way. We want to know the goodwill in Shay. We want to know the goodwill in what? In Temi. So in that case, what do we have? Don't forget, the goodwill in Shay, we are going to have what called consideration. The consideration paid by who class? Peju.
Yeah.
Who is paying that consideration? Peju, Abi. Then
Yes.
the consideration paid by Temi is the one that is going to be paid by who class? Shay. Then we insert our what? Indirect shaking you.
In.
Our indirect, are we there now? Indirect holding. Are we together? And we know that that indirect holding will be affecting what? Temi. Then we now include who? Class?
NCI.
Non-controlling interest. Are we there? After that, we now have our component of what class? Fair value adjustment. Sorry? Fair value adjustment now. It's fair value of what? Net asset. So when we get our fair value of net asset, we'll be able to determine what we call our what class? Goodwill on what class? On acquisition. Then we now have what is likely adjustment that we have?
Impairment loss.
Impairment loss. And after impairment loss, if there's any, we are going to now determine and get what we refer to as what we call, what do we have class?
Goodwill on consolidation.
Goodwill on consolidation. Is that Tommy saying?
Yes, sir.
Those things you can say, I told you that group is as simple as ABC, yes or no?
Yes, sir.
Well, once you know the basics. So class, note 4, what do we look for in note 4?
NCI.
Non-controlling interest. Ah, class, my Tomlinson is now champion. Okay, Tomlinson, we need the NCI one in relation to Sheyi, and we need the one relation to Temi. Let's get their percentage. That will help our job, 20%. Why Temi will be what?
25%. Sorry, 40%.
Okay. So what do I have here? Fair value, consideration paid. Then we now have post acquisition. I told us it's good to have it. We have the one from Sheyi. That will be 20% times. Then we have the one of Temi. That will be what class? 40% times. Are we together? Then we don't know if there's any adjustments. We leave the screen. Then working 5. What do I have in working 5? I want to put something there so that in case I want to do some jotting. Working 5, we have what we call the group retained earnings. What do we have in our group retained earnings? We have that relates to Peju. Then we now have the post acquisition that will be coming from Sheyi. What is going to be his percentage holding in Sheyi? That is 80% times. Then we now have the one of Temi. What's the percentage holding that the group will be having in Temi?
60%.
60%.
God bless you. Are we there now? Vanilla, are you in class?
Yes, sir.
Okay. Cosmo, favor, is favor 2 in class? Yes, favor. So we have that. Now, we've been able to do all this. And like what is it wrote to me, you know that we would have given all these at table before we now start moving on to know maybe there's any additional information. So we can now move to additional information. We are not winch. And what I'm going to do is that we stick to our rules. What we have here is that we don't know what is going to be here yet. We are not winch. Why I quickly do this is to remind you. But let's say that we have done that our rush manner. And which we are a student, which we are rush. We have done this 80 million. We now move to additional information. So can somebody tell me what is the additional information that we have? I've done the template. Let's see the additional information. The first additional information I'm saying here is giving me the retained earnings, which were 1st January 2021 and 1st of January 2020. Why did they give us this? It's because the dates of acquisition and that are not. Yes or no? Yes. So class, if I need to pick the retained earnings value for Sheyi, which of the values will I pick? 2021 or 2020?
2021.
Thank you very much. Thumbs up for you guys. Now, if I also need to pick retained earnings for Temi, which of the values will I pick? 2021 or 2020?
2021.
2021. Do we get that, class? Okay.
Yes.
If I need to pick value for the non-controlling interest, fair value of non-controlling interest for Sheyi, which date am I going to pick? 2021 or 2020?
2021.
2021. If I need to also pick the fair value retained earning for Temi, which value am I going to pick? 2021 or 2020?
2021.
So class, can somebody tell me why I'm picking 2021 for Temi too? I haven't been informed that Temi was acquired on 1st January 2020 by Sheyi.
Because the date of membership for team is 2021. That was when.
Thank you very much. At this juncture, class, I don't want the regular responder to respond. I want somebody else. He has said because of membership. Are you sure? Let somebody explain it further for me, please.
Because that's when Timmy got
We are
linked.
picking 2021.
Why am I picking 2021? Oh yeah. I will mention name if you are not talking.
That was the date Temi joined the group, Peju group.
Okay. Vivian. Okay. That is good. Favor, did you agree?
Yes, sir.
Okay. So that is that. Now, assuming we are not given that value for 2021, what are the possible ways to determine such value? If I'm not given 2021, what will I have to do? Osman, is Osman in class? Christiana, what will I have to do to get that amount? If you are not given the 2021, and we all knew that, and from the question you are told that Temi was acquired in 2020, how will I get the amount? Sharp.
You can do NCI percentage of net asset of team and date of acquisition.
Okay. This time around, you didn't give me the right answer. When it has to do with retained earnings, we need to work back.
We can pick the retained earnings on as at the date of that's 31st 2021. Sorry, the date of 2020 and had the one of 31st 2021 to give us.
Thank you very much. Good one, Governor. Our governor came in at the right time. That's why you are the governor. Governor. Okay, class. This is governor of class, or not governor of the state.
Sorry, sir. In that again.
Now, what we are saying is that in case you are not given the value of the retained earning of the subsidiary as at that date, And since it's not the same, you have to work back. You can work back by picking the value of your retained earning at the end of the year, and then they will give you profit for the year, so you can easily work back. You get that? So, Miss Tosin.
Yes, sir. I think
Now,
so.
let's move on with all the additional information. Innocent is not there. So, class, what's the value you told me? For this age? For Sheyi, it's going to be 150. For Temi, it's going to be what, class? 120. Do we get that? Okay. Let's move on next. The NCI. What is the NCI value for Sheyi? And what was the value? Let's go back to our question. What's the value for Sheyi? 120. For Temi is how much?
140.
140. You can see I'm not bringing the figure from home. Can you see it? Or you want me to highlight it? Look at it very well. We've already agreed. We are picking the date for 2021. This is for Sheyi. And this is for what? Temi. So I can take the figure back to the screen. So I have, help me, I've forgotten the date. I've forgotten the amount. Remind me, class. Sheyi is how much?
Sheyi is 120.
120.
Bless you. That means you are with me. Temi is how much? 140.
140.
Okay. The next information we now need. Let's go to the next additional information. The next additional information now says that impairment loss, there's no impairment loss. Then I say at the date of acquisition, it should be acquisition. I don't know where they got the acquisition. This type is on drug. The carrying value of the asset and liability were the same as the fair value, with two exceptions. Let's see. Temi's land had a fair value in excess of the carrying value by how much, class?
20 million.
20 million. And 1 year ago, the fair value of Sheyi investment, what happened? We're told of it was now how much? 110. Something have happened. So let's look at it, and I think that is the only additional information that we have. So the rest can now move. So let's look at this additional information. Then we'll treat them accordingly. So let's do the first one. So the first one we're going to do, I'll go to my note 6. In my note 6, I have the first additional information that has to do with what? Fair value on land in Temi. The question is that we are having a fair value upward, evaluation upward. So what do? I debit and I credit. So class, what will I debit? I'm going to debit my consolidated PP. Do you agree with me? With the total amount of how much? 20 million. Then what do I credit? I credit what we refer to as fair value adjustment, yes or no? And this fair value adjustment will be recorded in our which record?
Net asset
In the
of
net
Temi.
asset of Temi. And don't forget that is in our working 2B. How much is the amount? 20. So let's deal with the two of them so that we don't have anything hanging. Let's deal with them. So we'll go to Temi's record. We'll say we have fair value adjustment, fair value adjustment on land. And how much is the class? 20. So we also have here 20. Then we need to account for non-current assets. Do we have any non-current assets In this question, we don't have non-current asset. Rather, what we have, our column number 7, we have what we call other assets. So what's our other asset? We now have to record it here, other asset. What's the other asset for Peju? What's the other asset for Sheyi? What's the other asset for Temi? And then we now have our fair value adjustment. Fair value adjustment is 20. So we leave it there. We are not wish. We still leave the space because we have done this adjustment. That is adjustment number 1. They don't talk about. Next question we have. We said that fair value adjustment class. Anytime we have fair value adjustment, we need to ask ourselves, there's a need for us to look for what we call adjustment on depreciation. Are we going to have adjustment on depreciation?
Yes.
Okay, if you are having adjustment on depreciation, yeah, in this question, is there any adjustment on depreciation?
No, it's land.
No,
Why no?
no. They didn't give information on the useful life.
Thank you.
And
Even
also,
if they have not given us information on the useful life, they've given us the name of that company. So the name of that company class, the name of that item, which is land, is generally assumed that land will not be subject to what class?
Depreciation.
Yes or no?
yes.
So in that case,
Yep.
we are saying that the fair value adjustment on land is a non-depreciable item. It's a what class?
Non-depreciable item.
So it's a non-depreciable item. Are we going to account for depreciation?
No.
No, sir.
Can we move to the next additional information? And see, it's getting more and more interesting. So let's go green. 8. What's the next adjustment that we have? We are now told that there was a fair value adjustment on investment. So this one is fair value on investment. What is the fair value on that investment? What were we told? We were told that the investment in who class? In Temi was valued to how much? 410. What was the original cost of that investment? 400. In that
400.
case, what are we having? Fair value revaluation upward or downward?
Upward.
Upward. So in that case, what is that fair value that we're having? 10 million. So class, what's going to be the accounting entry? That will be debit our what class?
Investment in Temi.
Cost of
Debit
investment.
what?
Cost of investment in Temi.
We are going to debit the cost of investment in Temi. So don't forget here that that amount of cost of investment in Temi has already been accounted for. So if I'm going to increase it, what do? That amount that is that investment is that where we have to be very, very careful. That amount of that investment, as its investment, the name originally now is described as our what class? Cost of investment. And if cost of investment is to be accounted for in group, it can't be a debit entry. It's going to be an increase in our cost of investment. Okay, that is the credit item. Then what will now happen now is that we will now increase our net asset of Temi. Did you get what we have done? Because it means the net asset of Temi will increase. Are we getting that now? Sorry, the net assets, are you there now? We what? We what class of Sheyi will increase. Because it is Sheyi that have that investment. Why?
Yes.
Okay, what's the why?
The
Let me
entries.
explain very well. Is that who is the person that owns the investment? Who is the person that is buying, who is paying for that investment? Sheyi. And don't forget that Sheyi is also a subsidiary of somebody. So it means that if the investment of Sheyi is increasing, the amount, and that is where I'm going, look up very well. A lot of us would have come and said, investment in payment. I mean, it's increasing by 10. But if you have done this, don't forget that investment in Temi is part of the component of net asset of who? Of Sheyi. Do you get what we are doing? Let me explain using
Yes, sir.
the statement of financial position. You will get it very well. What we are having here, the 400 that we are having here, are we together now? The 400 that we are having here is what is increasing by 10 million. Is what is increasing by 10 million. And this amount that we are having here is part of the component of the net asset that Peju is going to acquire. Do you agree with me, that class?
Yes, sir.
Yes, sir.
So, and that 10 million
Yes.
is also the amount that Sheyi, don't forget, since Sheyi is buying, he will also be increasing the cost of investment. So it means that the cost of investment Sheyi is paying is increasing, and what Peju would be also contending with as the net asset of Sheyi will also be what class? Increasing. So that is why we have to also debit the net asset. Are we there now? Oluwaseun, did you get what I've done? Is that, yes, I will say debit, look at it, debit the investment in Temi by 10. But that investment in Temi will increase the net asset of who? Of Sheyi. Which automatically will increase the cost of investment that Sheyi will be paying for who? The Temi. Did you get that?
Yes.
Okay. So in that case, let's now go and do our accounting entry. So we move straight to the net asset of Sheyi. We'll come here, we'll say fair value, adjustment in investment. Don't know what's wrong with my handwriting this night. That shall not be tired. Investment. How much is it? 10. It happened on that day, so it will be extended. Automatically, it means our cost of investment, which is 400, will not be 400 again. Will now be how much, class?
410.
410.
Okay, I can do adjustment. I can now come and now say adjustment on indirect holding. So what would that be? That would now be 20. That would be 20% times 10. That will give me addition of what, class 2. Which that means that at the end of the day, what we'll be accounting for will now be total of what? 80 plus 2. That will give me how much, class? 82 million. Do you agree with me? Do you agree with me?
Yes, sir.
Which will now give us debit the non-controlling interest of how much? 82 million. And then credit to a class, cost of interest. How much, class? 82. This will not be our entry again. And this one will say that I do not. I have my reason why I didn't pick that adjustment. Because if you have a smart examiner, he might ask you to explain. So if you have put 410 here, if I want to go through the lazy route, I would have just said this 410, and then, but you can see the reason why it's 82, because of the additional work, class. What? The fair value adjustment on what, class? On the investment. Any question?
Yes, sir.
Yeah, question me. Top star. Who's top star?
Okay.
What's your name, sir?
Tell me talk way. This is
Okay.
the top.
Oh yeah, Temitope, go on.
Yes, sir. So the account you just debited now. Please can you go to the next sheet, sir?
Is it this sheet?
Yes, when you did the fair value adjustment on the investment. So I thought the net asset of Shei is a credit balance account since it has ordinary share capital and retained earnings. So with the debiting, if we are debiting it, it's still appearing as a positive, it's still appearing as an addition to the account.
Okay, we will need to remind ourselves what we did in the class when we were solving question on goodwill. Remember, Temitope,
Okay, sir.
when we say we are debited investment, are you there now? It means the assets of Shei will be increasing. Yes or no?
Yes,
Go
yes,
back.
yes.
Let's go back, class. Let's go back. Let's go back to our basic accounting 101. Remember, we said that when we are looking at net assets, we started by saying total assets is equals to what? Equity plus what? Liability, yes or no?
Yes.
We now said equity is equals to total assets minus what?
Liability.
Which means that this is also called
Which is net
net
asset.
asset, yes or no? Now,
Yeah.
let me now put the question to you, Temitope. When these assets increase, what will be the effect on this equity?
Equity increases as well.
God bless you. And that is what we have been doing with share value adjustment on PPE. Because what we are saying is that when our net asset is increasing, is a function of the total asset component that is increasing. That is why when we now have liability increment, when it comes to the net asset, we deduct. Do you get that now? Because what we are doing is that we are going through the equity approach by the understanding of what we call total asset, by what we call what? Our understanding of what we call what? Net what? Net asset.
Net asset.
And if you remember the question we did that has to do with adjustment of goodwill.
Yes, sir. So
Okay.
yes, so I didn't know you were seeing it from this perspective because for the fair value adjustment, what we do majorly is we debit the asset account, and what I assume is that we just credit the net assets table itself as at the date of report and extend it to the date of acquisition. So I didn't know that for this particular adjustment, you were looking at it from this
Thank you.
equity
And
equals
you know
net
also
asset.
why I'm looking at it from that angle? Because that same value that you are calling asset is the amount that the guy used to purchase the subsidiary. Did you get that?
Yes, sir.
Okay. So let's wrap it up. Let's wrap it up. Let's wrap it up. Let's wrap it up. Now we now have to look at them as we move. So we have done this. So let's go to our question and pick and dump. Okay, class, let's go ordinary shares. What's the value of our ordinary? Sorry, we don't have ordinary shares. We have what? Other assets. Peju is what? 1, 2. Shei is 500. Temi is how much? 600. Yes or no, class? Let's make it. Let's make it. At 4 a.m. Somebody should be on the road. Now let's have it. I hope you still have those figures with you. What is for Peju? What is that? Asset of Peju? Give it to me. 1,200. What is for Shei?
500.
What is for Temi?
600.
They are not winch. Let's quickly add it together. What will be the total?
2320.
2320.
Wait.
There's no other additional information, so let's not wait too much time. We just have here working, and I've forgotten the working, but it's 23220. What's the working, class? Who can help me? That is working what? Working 7.
Okay, 7.
Working 7. Now, let's move on. There's no other additional information. So we just move straight to fill in all the other elements in the statement of financial position. So I have ordinary share. Ordinary share of Peju is 400. That of Shea is 300. That of Temi is what? 200. We move on. Speak to me. My people, you can see how accounting is very simple. So for Peju, we have 400. For Shei, how much do I have?
300.
300. We take that. For Temi, how much do I have?
200.
200. Okay. The next value we need is our retained earnings. Let's go straight. What's the retained earnings of Peju? 550. Have you noted that? Are we together? The retained
Yes.
earnings of 550. The retained earnings of Shei is how much? 550. And that of Temi is how much?
250.
Thank you. If you are there, I am there. So we have the one of Peju, we go to where? Group retain what? Group retain any. How much is it? Help me. 550. Why that
550.
of Shei? And tell me
550.
we go to where? This 550. And what do I have here? 250. That. What's the next additional information that we have? Sorry, the next item we have there is now liability. And I think with liability we are done. So what's liability? 1050, 50, and 250. Do we need additional information for that? Or we just add it straight? Should I just add that straight? Or we do additional information? Let's do additional information. Let's be professional. So that is note 9. So we now have our liabilities. What's the liability? Liability for Peju is how much? 1050. For who now? For Shei. Shei is how much class? 15. And for who? Temi. How much is for Temi? Help me.
150.
150. So what's the total class?
1,250.
1,250. So all said and done. So that is working 9, I guess. That's working 9. So we have here working 9. That is 1,250. So let's fill in the other gaps. So we know where this one is going to. Non-current assets. We'll first bring it here with holding 82. Non-current assets. We'll bring it here. Indirect holdings. How much is it? 82. Value, that is 82. Don't worry, we'll soon be through. Some people are already yawning. Understand? So let's fix in the other figures. Let's get this one dash. Sorry, because this is dash. This is dash. 550 minus 150. Oh, yeah. Fast, please.
400.
400, thank you. So this gives me 400. What's the addition of this? 300 plus 150 plus 10.
460.
300 plus 550 plus 1 plus 10.
860.
860.
So we have that.
860.
Okay, let's also get this one. This is that 250 minus 120.
130.
This is that 200, 120 plus 20.
340.
240. 200, 250 plus 20.
It's 340.
It's 340 class.
Yeah.
Okay. I was confirming. Testing you. What's the next one?
47.
470.
Okay, without much ado, let's go on. What is the consideration paid by Peju? That's already 800. Yes or no?
Yes.
What's the amount paid by Shei? Shei is going to be how much? 410. I'm sure you remember that will be 400 plus 10. Okay, let's get our goodwill. What's our net asset? On the date of acquisition for Shei, how much is for Shei?
460.
460.
What is for Temi?
340.
I have 460. I have 340. So class, please, can you give me the goodwill? Can I get the goodwill? Some of us are not talking. Florence, I've not heard your voice. Jumoke. Please, who is using Nokia C1? I guess that should be Mr. Wasiu. Mr. Wasiu. Hello, Mr. Wasiu.
The first
Nokia
one is
C1. Who is Nokia C1?
Temi Goodwill is
Nokia
128.
C1. Huh?
Temi Goodwill is 128.
Yeah, okay, but I want to know who is Nokia C1. Hope we have not had people joining us that we don't know. Okay, next time I will authenticate. Who is Nokia C1, please? On your video. If I don't know you, I will remove you.
My network is disturbing me. Is that Lola?
Ah, that me. Sorry, I have named you Wasiu. Okay, it's all right. Pardon me. Let me rename you.
So don't rename me. Don't rename me. It's not my phone. It's not my phone. Don't rename it too.
Don't worry. If I name it anything does not work again, I can remove it. Oh, Demi. Sorry. The whole world is hearing us. Please, extension seller. For Sheyi, please help me.
460.
God bless you. Is there any impairment loss? None.
No.
Class, what is the goodwill for Temi?
128.
128. That me confirm. That is 128.
128. The wrote 1,218.
Okay, I was testing you. So 128. So class, what is the total?
588.
588. So we take that to our goodwill. That is working 3. So we have our goodwill here now. Goodwill. I want it to be distinct. So we have our goodwill. Working 3. 5 what? 88. So is that all the adjustments? Let's go to the next adjustment. So we now have, what do I have? What's our post-acquisition in Sheyi? 400. Okay. Post-acquisition in Sheyi is 400. Nice times 400. What is the post-acquisition in Temi? Post-acquisition in Temi?
130.
130. So let's move. Wow, very great. You guys are doing well. You are doing well. Oh, yeah, let's have that. Let's now have all our records. So we just get the total of this guy too. So let's have what we have. What's the fair value consideration for Sheyi of non-controlling interest? 120. I have 120 and 140. Okay. 20% of 400. What will it give me?
80.
80.
Please, God bless you. You can also do all of them vertically. Are you there? Oh yeah. 40% of 130.
52.
52.
So can I have 120 plus this will give me 200. 140 plus 52 minus 82. What will I have?
110.
110. So class, what is the total?
310.
Am I correct? 310. So let's take it to, that is working for non-controlling interest. That is 310. Working for. Okay. Is that all our adjustments?
Maintain earnings.
Group retained earnings. So let's go there. For our group retained earnings, we've gotten pages. Then this one is times 400. This one is times 140. Am I correct or I've missed it? What's the post-acquisition for Temi?
It's
130.
130.
30. Let's confirm. Don't let us bring the figure from home. That is 400, 130. And 130. So class, 80% of 400.
32.
320.
32 Ken.
Sorry.
320.
Okay. Somebody brought the figure from home. 60% of 130.
78.
78. So what's the total?
940.
5 what?
48.
940.
548 Ken.
948.
948. Thank you. I think that's the last figure we need, working 5. So we now have here working 5, 948. Can we have the addition for total asset and addition for total liability? Total equity and liability. Equity and total
Total
liability.
asset is 2908.
Pardon?
Total assets 2908.
Okay. 2908. Can we get equity and total liability?
Oh shit.
2908.
There's no balance any.
2908.
2908. And that is my story. Any question, Carl?
Yes, Mr.
Okay.
Emmanuel.
Yes, please.
The 10 million for that fair value adjustment. The second leg. We did not.
Okay. You said the second leg. Sure.
Yeah.
Okay, let me give you, since you have decided to let us do the leg, let me show you the first leg. This is the first leg, 10. Have you seen
Yes.
that?
Yes.
This is the second leg, 10.
Okay.
But you don't need to use the word leg. Let's see the accounting entry. Let's see the accounting entry there. Debit the net asset of Sheyi and credit cost of investment.
Okay.
Are you there? Now,
Yes.
if I'm also to change my grammar, because what's Dr. said is that if I want to go this approach, be very careful, which will still be the same scenario. And share Tokwe, look at this. If I come, since you are looking at that, I can say net asset of change. Then I now say add to the cost of investment. I think Tokwe, this was what you are looking at as you put at my double entry. Yes or no,
Yes.
Tokwe?
Yeah, yes.
So this one now will not confuse you.
Yes.
Any other question? Class, any question? Okay.
No,
Do
sir.
you need the slide or
Yes,
you
sir.
already
We
have
do.
it in your notes?
No,
We
we
need-
need the slide, though. I beg.
Okay. So I'll be sending the slide to you on your WhatsApp group. So without any other question, I think we can say that we brought the class to an end, and we've been able to look at this and we have seen the lesson here. So next class, we should be able to move to what we call step acquisition. So after step acquisition, we look at mixed group structure. After mixed group structure, we'll be looking at what we call foreign. Before I go to foreign, we'll likely look at disposal. Then we'll look at foreign. So short, all those ones that are difficult are the ones we have done now. So we say, unto God be glory, honor and adoration, Almighty God and Father, we thank you for the little we have done. We pray God Almighty that the little will be more than enough.